Welcome, curious minds, to another dip dive.
Great to be here.
Today, we're plunging into a topic that, okay, maybe at first glance seems a little, well, maybe a bit niche: global life insurance.
hmm
But honestly, stick with us because this is actually fascinating stuff. We've got the source, global life insurance market growth trends, and our mission really is to pull out the key insights.
Right.
We want to figure out what these trends tell us about the global economy, about, how individual finances are changing. Okay, let's unpack this.
Exactly. And it's important because while life insurance might sound dry, looking at these global trends gives you some unique perspectives.
Yeah.
Yeah, it's actually a pretty powerful indicator, often overlooked, of economic health, uh, consumer confidence, that sort of thing, and how societies are thinking across different regions.
Okay, and we promise you're going to hear about some really surprising growth stories. We'll look at what these numbers, these projections, genuinely reflect about societies all over the world. It's quite a lens, actually.
It really is.
So right off the bat, one thing seems really clear from the source. The global life insurance market seems to be on a pretty strong growth path overall.
That's the big headline, yeah.
Yeah.
What's fascinating, I think, is just how consistent and widespread this growth is projected to be.
Consistent.
Yeah, the data we're looking at shows positive compound annual growth rates,
Yeah.
CAGRs, for pretty much every region, every country lifted,
Right.
right up to 2033.
Wow, okay.
So that consistent uplift, it suggests a broad global confidence, maybe,
Yeah.
people looking towards long-term financial planning,
Securing the future.
something like that, yeah. Society is increasingly focusing on it,
And when we talk scale, North America is, well, it's massive, isn't it? Led by the U.S., obviously.
obviously.
The source puts the U.S. market at, let's see, $975.84 million back in 2021,
hmm
projected to hit $1,490.67 million by 2033. That's a 3.59% CAGR. Still pretty huge numbers.
Absolutely huge in absolute terms. The U.S. market is, incredibly mature. So that growth, while significant dollar-wise, is steady, reliable.
Right.
And that kind of provides a baseline, a sort of anchor, when we start comparing it to maybe faster-growing markets,
Yeah.
especially in, say, emerging economies.
Okay, because here's where it gets really interesting, I think. Let's pivot to Asia Pacific. China,
Right, big player.
its largest player in this sector, yeah. $251.19 million in 2021. But the projection, $457.59 million by 2033. And the CAGR is 5.14%.
Yeah, that's quite a bit higher.
So, okay, the U.S. market's bigger in total dollars reported here, but that Chinese growth rate, that suggests a whole different kind of momentum, doesn't it?
That's a really crucial difference, yeah. China's higher projected CDR points to much more dynamic expansion.
What do you think?
Well, the source doesn't specify drivers, but you can infer, right?
Yeah.
Probably things like a rapidly growing middle class, more people moving to cities, maybe just growing awareness of these kinds of financial products.
Right. Makes sense.
It really sets the stage for looking at these regional differences.
Definitely. But okay, if you're looking for where the market is truly surging, like the highest growth rates we have, to talk more about Asia Pacific overall.
Yes, it's definitely a hotbed, according to this data.
It seems like it.
And if we connect that back, India really stands out, doesn't it? It has the highest projected growth rate in the entire data set,
Which is?
a remarkable 6.01% CAGR.
Wow, 6%.
Yeah, revenue projected to basically double, from $91.27 million in 2021 up to $183.63 million in 2033.
That's huge.
It is. And a rate like 6.01%, that's not just numbers. It suggests, profound shifts happening, maybe rising incomes, better financial literacy, more trust in institutions, a real move towards planning long term.
And India is not an outlier in the region, is it?
Not at all, no. Looking at the source data, many other APAC economies are showing really impressive growth. It signals this broad regional shift.
Like who else?
Well, Southeast Asia as a whole block is projected at 5.46% CAGR.
Strong.
Very strong. Then you got Singapore, 5.2%, Taiwan, 4.61%.
Even the big established ones.
Yeah, even Japan, a very mature market, is set for a healthy 4.34% CAGR, according to this. South Korea, 4.30%.
Right.
Australia, 4.12%.
Mhm.
And the rest of APAC's category is also strong at 4.48%. So it's this widespread, pretty vigorous expansion across the board there.
So what's fueling all that? It's quite diverse, that region.
It is diverse.
Yeah.
And again, the source focuses on the numbers, not the why, but this collective strength, these high KGRs, it points towards a region really undergoing rapid economic change.
Yeah.
More financial inclusion, growing middle-class populations, maybe even demographic changes, pushing people to think more about the future. It just signals these evolving financial landscapes.
Okay, let's shift gears. Moving across the globe.
Yeah.
What about the more established markets, Europe, the rest of North America? What are their stories looking like?
It's definitely a bit more varied over there
Mhm.
compared to those really high surges in APAC. Reflects different stages of maturity, different dynamics.
Right.
So North America, but beyond the U.S., Canada shows a strong 4.39% CAGR.
But
Yeah, consistent, healthy growth, projected to go from about $136 million to nearly $228 million. Mexico is also robust, 3.89% CAGR, heading towards $147 million.
So steady growth there.
Steady, exactly. Not explosive like some parts of Asia, but typical of these more mature economies.
Okay, so what does this all mean for the European picture then?
Well, Germany stands out as a major player, projected revenue going from $108 million to about $178 million. That's a 4.36% CAGR.
Also quite strong.
It is. And the UK is another significant market. Expected growth from roughly $93 million to $146 million with a 3.93% CAGR. Solid gains.
But is it like that everywhere in Europe?
No, and this is where you see the spectrum. It's definitely not a uniform trend across the continent.
How so?
Well, while Germany and the UK, and actually Spain too at 3.94%, Sweden 3.92%, Denmark 3.67%, Netherlands 3.83%, they're all showing pretty decent growth.
Okay.
Other major European economies have more moderate projections in this data, like Russia, down to 2.23% CAGR, France, 2.98%,
Yeah.
Italy, 3.34%, even places like Luxembourg at 3.2%, or Switzerland at 3.41%.
Interesting. So quite a range.
Exactly. It clearly shows this spectrum.
Yeah.
Even within mature markets, you've got different national situations playing out, maybe demographics, economic policies, even just cultural views on financial planning, perhaps. It's leading to quite distinct paths.
Yeah.
No single story for European growth here.
Okay, so beyond the sort of giants and the established players, there are these other really compelling stories unfolding, right? South America, the Middle East, Africa.
Absolutely. These regions are becoming increasingly important, and the growth narratives are fascinating.
Talk about South America first.
Well, it's interesting how specific countries there are projecting quite robust growth. Brazil, for instance, shows a 4.29% CAGR, projected to grow from $61 million to over $101 million.
Solid.
Yeah, but what really stands out, maybe surprisingly, is Argentina and the rest of the South America category both showing a 4.91% CAGR.
Higher than Brazil.
According to this data, yes. And then you have Colombia at 4.04%, Peru 3.98%, Chile 4.18%, all showing solid growth, mostly above 3.9%.
So just growing stability, maybe.
Could be increasing financial stability, maybe a rising middle class driving demand for that long-term security. Seems plausible.
Okay, and these numbers, they really paint a picture of burgeoning financial markets elsewhere too, right? What about the Middle East?
Yeah, another region with strong figures. The UAE leads the pack there with a projected 5.10% COGR.
Wow, over 5%.
Yeah, from $18 million projected to nearly $33 million. Turkey's also performing well, 4.70% CAGR.
And the others?
Saudi Arabia is at 4.42%, Egypt 4.26%, the rest of the Middle East also 4.42%. Qatar's a bit more moderate at 3.64%.
So generally strong growth across the region.
It points that way, yeah.
Yeah.
Maybe growing wealth, economic diversification efforts paying off, leading to more demand for financial products like life insurance.
And Africa, what's the picture there based on the source?
We see significant potential there, too. South Africa leads with a 4.24% CAGR, projected growth from about 31.5 million to 56 million.
Okay.
Nigeria is projected at 3.86% CAGR. And even the rest of Africa, while a bit lower at 3.00% CAGR, still shows substantial growth potential, moving from $39.5 million towards $61 million.
So these markets might be starting from a different base, maybe?
Perhaps, yeah.
Yeah.
But they're clearly showing this growing appetite for life insurance, reflecting, hopefully, improving economic conditions and just a general shift towards more proactive financial planning across parts of the continent.
So wrapping this up, what seems really clear from our deep dive through this data is that, okay, growth seems to be happening pretty much everywhere. But the rate of that growth and maybe the nature of it is just remarkably varied across the globe.
That's exactly right.
It really reflects all these different economic paths, different social dynamics. It's a diverse mosaic, really.
Absolutely. ultimately, this deep dive, it just reveals a global market that's really in dynamic motion. And these growth patterns, they offer this fascinating lens, don't they?
Yep.
A lens into worldwide economic development, evolving societal needs, and how people, across very different cultures are increasingly prioritizing their long-term financial security. It's about more than just the finance industry. It's about understanding shifts in stability and foresight globally.
So here's something to think about then. Considering these really diverse growth patterns we've talked about, and maybe some of the underlying factors we speculated on, what does this tell you about which regions might be emerging as the next maybe financial powerhouses? And how might understanding that shape your own perspective on these global economic shifts?
Interesting question.
Something to ponder. Thanks for joining us for this deep dive.
Welcome back to the deep dive. Today, we're shifting focus a bit. We're diving into a sector that's, well, it's really changing fast, much faster than you might think. We're talking about the global life insurance market. Yeah, forget the dusty old image. It's actually a pretty critical reflection of how financial security and, personal planning are evolving all over the world. So our mission today, to unpack what's really pushing this market forward, the drivers, and also what's holding it back, those stubborn restraints. And then the really exciting part, the new trends shaping its future. We're basing all this on some great source material from cognitive market research. Think of this as your shortcut to understanding a really complex, but honestly super important industry.
Absolutely. And, this isn't just for people who already have life insurance. Understanding these shifts, it gives you these aha moments. You start seeing connections to broader economic changes, how tech is shaking up even like the most traditional sectors, and even how our own ideas about wellness and financial planning are changing globally. It's quite revealing.
Okay, let's unpack this then. What's really fueling the growth? What's the engine behind the life insurance market right now?
Well, the most basic thing seems to be just more awareness globally. People are increasingly conscious of financial security, the need for risk protection, just really wanting to secure their family's futures. That seems fundamental.
Right, and if you zoom out a little, you see that reinforced by, well, the huge expansion of the global middle class.
Yeah.
And hand in hand with that, rising disposable incomes.
Okay.
We see this especially across emerging economies.
Yeah.
You've got millions of people who now not only get why they might need something like life insurance, but they actually have the money to invest in it. Long-term financial tools become accessible. But what's maybe less obvious is how that pressures the insurers themselves. They have to change their game. It's not just basic protection anymore. They're moving towards more complex wealth management, almost becoming financial advisors. That's a huge shift, really. Interesting. And it's not just people acting on their own, right? You mentioned governments are getting involved too, playing a maybe surprisingly active role.
Definitely. Government initiatives, tax incentives, they can be really powerful catalysts.
Like the example in India, the Pradhan Mantri Jeevan Jyoti Bima Yojana, PMJJBY, I think it is.
Exactly. The PMJJBY, that's a government-backed scheme. It offers very low-cost one-year term life cover. It's aimed mainly at economically weaker sections of the population, so it directly promotes insurance uptake, makes it affordable, accessible. It really boosts market penetration in a big way.
So government policy is clearly a push factor.
Yeah.
But you also mentioned tech. That's got to be huge too, right? Transforming things from the ground up.
Oh, absolutely. Technology is a game changer here.
The rise of digital distribution channels, for instance,
Yeah.
making insurance just so much more reachable
Yeah.
and transparent.
Yeah, I mean, think about it. Online platforms, mobile apps, digital agents. You don't need to walk into an office anymore. You can compare, understand, and even buy policies right from your phone or computer. It lowers the barrier to entry significantly. But this accessibility raises another point. What are people actually looking for when they do buy?
Good question.
Demographics play a huge role here. We've got aging populations in many parts of the world. And at the same time, government pensions maybe aren't as reliable as they once were or perceived to be. So you see this direct increase in demand for life insurance plans that do more than just protect. People want investment options, retirement benefits built in. It changes what consumers fundamentally expect. They're looking for this blend, security and savings, not just a payout upon death.
Okay, so you've got growing awareness, more money in people's pockets, digital access making it easier, governments pushing it, consumers wanting more sophisticated products. Sounds like a recipe for explosive growth. But You mentioned restraints earlier. It's not all plain sailing.
Not at all. There are definitely things holding the market back, significant anchors, really.
Like what? Where are the main pain points?
Well, in some developing regions, for example, you still have very low insurance penetration. That's a major hurdle.
Why is that?
It's often a mix of things. Deep-seated cultural hesitancy, maybe. Sometimes just limited awareness of what insurance actually does. And frankly, sometimes there's a real mistrust of insurance companies, maybe based on past experiences or just, a lack of understanding. It's more than just a sales challenge, it's societal.
Right, that cultural barrier. And you mentioned complexity too.
Yes, exactly. That compounds the problem. Let's be honest, many life insurance policies can be incredibly dense, full of jargon, fine print.
Mm.
It's hard for the average person to really grasp what they're buying.
Uh-huh.
And then if you add on potentially lengthy, difficult claim settlement processes, well, that really damages consumer confidence. If it's hard to buy and potentially a nightmare to claim, why would you engage? It creates this negative cycle.
Yeah, I can see that. And what about the providers, the insurance companies themselves? Are they finding it easy?
Not necessarily. They face their own struggles. Regulatory hurdles, for one. Compliance rules are always evolving, often getting stricter. Things like solvency requirements, rules about disclosure, policyholder protection.
Okay.
It all adds up. It means increased operational burdens, significant costs just to stay compliant.
And competition, is that fierce?
Oh, incredibly fierce. And here's a really compelling dynamic. Often there's quite limited differentiation between products.
Meaning they all look kind of the same?
Pretty much, yeah. Which inevitably leads to price wars. Everyone's competing mainly on cost.
Right.
That squeezes margins wafer thin. It makes it really tough for insurers to be consistently profitable and, crucially, to build any kind of lasting customer loyalty. If price is the only difference, customers will just switch for a better deal. It's a race to the bottom in many ways.
Okay, so quite a complex picture. We've got these strong growth drivers, but also these significant brakes on the system. Given all that, this push and pull, what does it mean for the future? What are the key trends, the innovations that are really reshaping things?
Well, the first one we have to talk about is technology again, specifically AI and big data.
Right. How's that changing things?
It's massive. It's revolutionizing underwriting how insurers assess risk. They can use vast amounts of data, even non-traditional data, for much more accurate real-time assessments.
So better pricing, more personalized offers.
Exactly. Personalized policy offerings become much more feasible. And it doesn't stop there. AI can also speed up claims management significantly, automating parts of the process. It makes the whole system potentially more efficient, more tailored.
Okay, AI and data. What else?
We're also seeing a really noticeable shift towards microinsurance and pay-as-you-go models.
Microinsurance. Tell me more about that.
So think very small premiums, sometimes paid daily or weekly, often leverages things like mobile money platforms. It's designed to reach low-income groups, people in the gig economy who maybe can't afford or don't need a traditional long-term policy.
So more flexible, more accessible for different segments?
Precisely. It could be covering specific risks for short periods, maybe crop insurance for just one harvest season, or basic funeral cover paid month to month. It demands totally different distribution, different thinking about revenue for the insurers.
That sounds really different. And what about this wellness trend? Integrating health programs. That feels like a big shift too.
It is. It's potentially a game changer. It almost flips the model.
Oh, so?
Instead of just paying out when something bad happens, the focus shifts towards actively preventing it. Policyholders get rewarded discounts, incentives for healthy behavior, for using fitness trackers, joining wellness programs.
So the insurer and the customer are suddenly on the same side. Both want the customer to stay healthy.
Exactly. It aligns interests beautifully. Insurers potentially pay fewer claims, customers get lower premiums and, better health. We're already seeing programs using wearables, offering gym discounts, linking premiums to health metrics. It's moving beyond just a safety net.
Wow. Okay. That's fascinating.
And one more key trend, building on this idea of reaching customers differently, bancassurance and embedded insurance.
Right. Selling through banks.
Yeah, bancassurance is that partnership model insurers using the bank's customer base and branches to sell policies. Very efficient distribution. Embedded insurance takes it even further. Insurance becomes part of another purchase.
Like when you book a flight and it asks if you want travel insurance.
Exactly that. Or device protection when you buy a phone. It's seamless, almost invisible. It meets customers where they are, making insurance a natural add-on rather than a separate, complex purchase. It really accelerates outreach.
So quite a journey we've taken today.
Yeah.
We've looked at the powerful drivers pushing growth, the real restraints holding it back, and these really exciting trends, AI, microinsurance, wellness, new distribution channels. It's clear the life insurance market isn't standing still. It's undergoing some really significant change.
It really is. And that leads to a final thought, maybe something provocative for you, the listener, to consider. As life insurance evolves, pushed by tech, by changing needs, it seems to be moving towards a future where financial protection isn't just a safety net anymore. It's becoming potentially more personalized, more integrated into our daily lives, even our well-being. Imagine, truly, an insurer actively helping you live longer and healthier, and that being part of their business model. What does that future really look like? How does it change our whole perception of insurance? And, maybe more personally, how might these shifts impact your own long-term financial planning, your approach to health? Definitely something profound to mull over.
Absolutely. A lot to think about there. Thank you for diving deep with us today. We'll catch you on the next one.